Back in the day, when there were no electronic markets and people traded in the pit, there were a lot of colorful personalities in the pit itself. Unfortunately, I did not get to know many of them. I just got to know very few of them because when I started my career as a broker, pretty much it was the transition to electronic markets. The Globex was launched. So I would say the big majority of my career was involved in the online trading business. For many years, I did do broker assisted. I did do phone execution, but at the same time, it was all going on while the online business was developing and customers were trading online in one way or another. But the one thing that was unique to floor trading and pit trading was the flow of information that was so transparent that is really not very transparent right now. For example, you could see, let's say, a pit broker executing thousands of lots for a very large company. So he would start buying a certain contract. It could be in the S&P pit or it could be in the bond pit. And then pretty much that's what created all the chaos. And the same goes for the selling of a contract. If somebody came in with a very big contract and wanted to sell it, then again it would create chaos in the pits and everybody would join the sales part. So you would think that somebody that was in the pit would automatically make money as soon as somebody would start buying very large contracts in the pit. Or vice versa, again, if somebody came in with huge short orders, you would automatically make money if you just knew about it and if you were in the pit. But this is far from the truth. The reality is that not everybody made it in the pit. It was hard. I know that people got physical in the pit to get the orders. They would get very violent, and there was a lot of cursing. And again, this is from the stories that people told me and the personalities that I've met over the years who were in the pit. Again, they were very colorful personalities. So the idea of information in the pit, as soon as you're there making money automatically, as soon as you would see the buy orders or the sell orders coming in, is false. It was a lot more developed than that. And I'm going to explain it here, and then I'm going to explain to you as a trader how it applies to you. So if, let's say, there was a flow of information, let's say somebody would come in with tons of orders to the market, sometimes it would not move the market. So just because somebody came in with a very large lot to buy and it was in the midst of a bull market, it doesn't necessarily mean that the minute he starts buying, the prices would go up. And the same goes, for the sale orders. So if somebody came in the midst of a complete meltdown just because he started throwing in more sell orders, does not mean necessarily that at that point in time it would fall further. As you know, even in a declining market, you can have very large upswings, and in a buying market, you can have downswings. So again, even though the flow of information was there, it's not that you could make money automatically. Again, in the pit itself, the number of people who made it was small. You needed to have risk management skills and cash management skills and admit when you're wrong as well. So a lot of traders think if they have that type of information today, they would be able to simply ride the wave of information and make money. But the reality is that, again, you can have huge orders coming in and of buy and sell. And at the same time, it does not necessarily mean that the price would move immediately in your favor in that point in time. And that brings me to another point, is basically how early do you get into your trades? So the flow of information really is just an analogy to a method, right? It's just you're looking for big orders coming in. You can have your own method. You can have moving averages or RSI or stochastics, order flow, anything like that. Or you could potentially even detect big orders coming in. So the question is, the minute you see the signal coming through, I think it's important to wait a little bit and to see the impact on the price. So, for example, if the people in the pit, and again, I was never traded in the pit, so everything that I'm telling you is a little bit of a secondhand experience, but again, I've spoke to them extensively over the years, when the pit was abolished, and a lot of them were very upset because they could not take their skills from the pit to the screen. But while we were talking, I got all this information that really helped me shape the idea of how they traded. And again, you still had to wait a little bit to see the follow through on the price. So when you trade your method, whatever the method you use, irrelevant, you really have to see what is the impact on the price the minute that it occurs. So let's use a very, very simple method, okay? Let's say you're using moving averages. And again, I'm not advocating using moving averages as a method. It could be part of a method, or it could be your entire method. I don't know, but it's just an example. So let's say you're waiting for some sort of a crossover to the upside, right? So if the crossover occurs, then do you get into the trade early, or basically do you want to wait a little bit to see what is the follow through on the price? So, and you have some sort of a setup, and you have a trigger, and you have a follow through. And I think the follow through really gives you the context if the thing is really working. Because if you have a crossover to the upside and the market starts going down, well, of course, it could be an opportunity, but it also could be that at that point in time, maybe your method is not working. So maybe it's better to wait for some sort of a follow through and to see if the market does go up or go down according to the signal that you get. I think that a lot of people are basically very greedy when they have signals and they want to get in at that point in time. Now, here's the interesting part. When I tell people they're greedy, they come back and they say, no, I'm not greedy. I shop at the 99-cent store and I really buy cheap t-shirts. I'm not a guy who wastes money. I'm not greedy. And my answer to that's not what greed is. Greed is part of our DNA. I have it, you have it, my cousin has it, everybody has it. And it's basically triggers when we trade the markets. It means that we want to max out the potential that we have in the market. That's all that greed means, is that we want to basically get as much as we possibly can out of the markets. It doesn't say greed. That's what I mean. Greed does not refer to being a bad person or a good person or anything like that. It's simply that instinct of the DNA to tell us we have to max out. We got the signal. We have to do it. So the point of this is that whatever method you use, maybe you wait a few seconds. Yes, literally just a few seconds to see if the price has actually followed your method, if it followed your price action or whatever you use out there. So that would potentially, could give you a little bit of an insight of whether the method is working better for you. Meaning that maybe out of 10 trades that you take, maybe some could potentially be better because you waited just a little bit. You can try it out. You can see. I'm not saying that my truth is the universal truth of trading. I'm not an arrogant guy. I'm just sharing my experience with you and hoping that I help traders somehow improve their state of mind and their psychology and their discipline, because I'm definitely not a broker that downplays the difficulty of the market. So talking about the pits and talking about, the large orders that are coming through. On our own platform, Optimus Flow, which I think is a great platform because of its visual display, its order execution, there is a function called Power Trades. And Power Trades is basically a function that allows you to filter and see big lots and orders coming in the same way I would say that the guy in the pit was able to see large orders coming in. Of course, the person in the pit, it was reflected in the noise level. It was reflected in the guy yelling, buy, buy, buy. In this specific Power Trades function that we have is simply large lots that you could see coming into the market. Again, does it guarantee that the moment in time that it triggers some sort of a larger order, the price would start going in that direction? No. I think that you have to basically use it as a filter and see if it does affect the price and see what happens to the price after. And I think it takes a little bit of time to learn how to observe large orders and see the impact on the price. So you don't necessarily have to trade it from day one, but you can observe it and see if it helps you with your method. Again, any method you use out there, you want to see the impact on the price. And for every single person, every single trader, it could be a totally different interpretation. And one interpretation is not better than somebody else's interpretation. It's just a different perspective. Somebody could wait 5 seconds, somebody could wait 10 seconds, somebody could wait 3 minutes. There is nothing wrong with it. It all boils down to your personality. And the only thing I want to say and end this podcast with is that, just like in the pit, there were tons of personalities working side by side, and many of them were successful, and many of them traded in different ways. You could potentially work side by side with other traders. I know they're not sitting beside you, but I don't want you to be in this pursuit of the holy grail out there. You have your own personality, you have your own risk tolerance, you have your own risk capital that you're dealing with. Some people have more, some people have less. You have to deal with what you have. And that's basically it. And hopefully this podcast gives you the perspective to basically wait a little bit when your method occurs. That's the only thing I want to end this podcast with. It's just basically some sort of a discipline that says, okay, when your signal occurs, see what happens to the price. Now, you could have a method that the price starts moving the minute that your indicators or your method occurs. I don't know that, but I'm saying that if sometimes you have a lot of false signals, maybe it's better to wait a little bit. And that way, hopefully, you will not get too early into the market. I wish you a great week. I just wanted to point out that there's substantial risk of loss in futures trading. Past performance is not indicative of future results, and trade only with risk capital. It's okay to have the trade frequency that you have in the markets. You can trade more, you can trade less based on your time availability, but just trade when you can actually sit in front of the markets and monitor the markets and not have spontaneous reactions to the market. I wish you all the best. Again, a great week, and I'll see you on the next podcast. Thank you.